So the government has shifted focus from capex drive to consumption thrive. Hi, I'm Sanjeev Hota. Let's talk about Union Budget 2025. We believe the Union Budget for 2025-26 carries more positive than negatives. With a strong focus on boosting consumption, the key highlight of the budget is substantial increase in the income tax relief, which approximately 1 trillion rupees will directly support the consumer spending. On the flip side, the capex allocation for FY26 stand at 11.2 trillion rupees, reflecting a moderate 10% Y-on-Y growth over revised estimate of 10.2 trillion for FY25. While the market reacted with mild disappointment, this figure broadly aligned with our expectation. Over the past 4 years, the government has taken the lead in driving capex, and now the onus is shift to the private investment. The government continue to provide incentive for the manufacturing sector, at the same time emphasize the public-private partnership model to sustain the growth momentum. Importantly, the fiscal numbers are slightly better than what we have anticipated, with FY26 fiscal deficit now target set at 4.4% versus 4.5% earlier. Net market borrowing for FY26 are projected at 11.54 trillion, a development that bodes quite well for the bond yield and the positive for the rate-sensitive sector. The macroeconomic assumption for FY26 appear more realistic, with nominal GDP growth projected at 10.5%, corporate tax revenue expected to grow by 10%, income tax collection to grow by 14%, and total revenue expenditure increasing by 6.7%. Coming to the biggest beneficiary of this budget, the consumption-driven sector, including staple, quick service restaurant, white goods, discretionary segment like hotels, tourism, stand to gain the most out of this budget. Coming to the biggest loser from this budget, capex-heavy and infrastructure sector, including the defense company, may face some headwinds in terms of moderation in capital outlay program. Now coming to the portfolio strategy, we recommend increasing exposure to the consumption-driven play and rate-sensitive sector while reducing allocation to capex and infrastructure. Our broader market outlook for 2025 remain cautious, with expectation of correction in small and mid-cap space and sector rotation favoring spaces like IT services, Pharma, FMCG, consumption, specialty chemical, and selected bank and NBFC. The budget reinforces India's structural growth story with a strong push for domestic consumption. The government's tight fiscal discipline and balanced with pro-growth measure could pave the way for a long overdue sovereign rating upgrade for India. With the policy groundwork laid now, the next move now rests with RBI to cut rates and provide necessary impetus for the growth. Now coming to the sum of the budget pick, what we like is Mahindra & Mahindra, Hero Moto, Tata Consumer, Bata, Colgate, Dabur, DLF, Bajaj Finance, ICICI Bank, Excite, V2 Retail, Macrotech Realty, and Max Financial. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.